How has investment banking changed in the microcap market over the years? I began on Wall Street in 1984, 35 years ago, or before cell phones, before the internet and social media. The amazing changes to investment banking due to technology changed the world, let alone financial markets. The actual process of raising money, however, still closely relies on laws created in 1933 and 1934, 50 years before my first day on Wall Street. Raising capital has not really changed much since the signing of the Buttonwood Agreement by 24 New York City stockbrokers and merchants, May 17, 1792, right outside 68 Wall Street under a buttonwood tree. In fact, the Dutch East India Company in 1602 issued the first shares on the Amsterdam Stock Exchange. IPOs, initial public offerings, zoomed as full disclosure and transparency emerged due to technology and market growth. Simply put, investors with discretionary income sought access to growth companies and capital formation through IPOs, which were off and running. The investment banking industry, beginning in the mid to late 1980s, grew exponentially, which created an IPO buying frenzy, including the financing of many of today's household names. Today's OTC markets, an alternative trading system, which began as the Pink Sheets in 1913 as the National Quotation Bureau, and the NASDAQ exchange, which began in February 4th, 1971, list the majority of public companies in the U.S. Raising capital and getting public is the end game. Getting to that position is where many of the changes have occurred over the years, especially since my entry in 1984. As the emerging growth companies and global emerging markets collided at the SEC and FINRA doorsteps, new rules and regulations were installed to protect investors in many ways from their own attempts to participate in the process of getting rich quick. The dot-com boom, the tech bubble, and the internet bubble was a historic speculative bubble and period of excessive speculation that occurred from 1994 to 2000, a remarkable period in history as extreme growth and adoption of the internet turned many individuals into investors, and in 2001, the bubble burst and the dot-com bust created a new cadre of bankrupt individuals. This resulted in the age of over-regulation. Accordingly, here in 2019, many nuances on an old theme, capital formation, has yielded new packaging with somewhat easier access to capital. This is Ask Mr. Wall Street. Thanks for listening.